Good afternoon, everyone. I C. Raj Chawla, Vice Chairman, MSME and Startup of Committee of ICI. Welcome you all. As we know, India is third largest ecosystem in the world, and chartered accountants are known for financial acumen and strategies. CSR delve into the startup mentorship like registration, valuation, compliance, financial advisory, reporting and listing. So we feel it is good area for our chartered accountant friends to look into the opportunity. Considering its importance, today we have with us C. Atul Chawla ji, our guest faculty for today program, who will explain about the opportunity for CA in startup through this webinar. Also, we have with us CA Virender Goyal ji. He is a very prominent and senior chartered accountant in Delhi. I will also request him if you want to give some opening remarks about this startup opportunity for our chartered accountants.
No, I can only say that the deliberations by CA Atul Chawla Sahab will be of great use to all the professionals, colleagues, and it will go in a long way to understand the nitty-gritties involved into it and how to go take it forward. Thank you.
Thank you, Goyal Sahab. Now I request C. Atul Chawla ji to please start his deliberation.
Hi, I'm Atul Chawla, CA, and on behalf of the Institute, and many thanks to, of course, Raj Chawla ji, I am delighted to share my whatever experience that I have gained all in last couple of years, especially in the lines of startups and the opportunities that there are at this particular moment. Before that, I would also try to understand that the opportunities for startups is not just only about explaining the fact that we have the new Modi government that is, insisting a lot of opportunities on initiating the startups from banks, AIFs, and other modules. But for us also as chartered accountants, what are the opportunities that we can avail, make use of, and take the benefit of? So in that scenario only, I would want to, be more open. And in case you have any kind of questions that you might want to ask, I think it will be even better for us that we can have those exchange of views so that, we make a joint effort to understand what are the opportunities for us, especially in this growing age when we see very young technocrats, very young entrepreneurs. Why do I say entrepreneurs? Because in startups, we have seen all kind of people making use of basic knowledge about digital marketing, Facebooks, and LinkedIn, Instagram, and because of only those few tools, they have been able to make their product popular. They have been able to, I would say, reach out to the customers. Of course, those who have the knowledge in terms of the technology are always, in the forefront. But still, on behalf of the knowledge that we have as consultants, as financial consultants, what opportunities we have, I think it's a good time that we can share those things as well. And in case you have any questions that you would want to take up before, with whatever knowledge that we have, if you have any questions, it'll be nice. We can keep sharing it so that, it will make us a joint effort of learning together. And in terms of what is the opportunities that we see together in terms of the startup domain is concerned, I'm sure a lot of people must be aware that if you are, reading especially the Economic Times or the venture capital news that you are, that are aware of, what kind of funding that are taken up. It can be a seed funding of 20 lakhs, 50 lakhs, 5 crores, 100 crores, even more. So what is the opportunity for us is what is, more important to understand. And only then probably we'll know that how we can make use of the growing inertia among all people around us, how we can ask our clients to not just be laid back businessmen, but also use this opportunity of government and, banks, NBFCs who are coming forward, especially the AIF. If any one of you who has dealt with the AIFs or venture funds wants to share any experience, I think that will be even better so that, we can have more intelligent conversation. But before that, I would just want to, go ahead with some basic experiences, especially in terms of what are the opportunities for all of us. I'll just share my screen. One second. Yeah. So in terms of the opportunities that we were discussing, and what are the opportunities that we all feel that yeah, one second. Yeah. I hope it is now it is clear for yeah. Yeah. So basically, what we are trying to understand here is that what are the opportunities, especially when I also try to change from just about direct taxation or indirect taxation and GST. We saw a huge pool of opportunity of growing our business and growing our customer base. For us, as we all are CAs, and we understand that creating a new client or meeting up with a new client, especially the top large corporates, is usually difficult for a small practitioner. If I'm talking about the small practitioner, those may be 2 partners, 3 partners, or proprietary firms. For them, how do you really scale up your business? And then I think we came up with the opportunity of meeting the startup investor, not just the investor lobby, but also the startups. And then we realized that people of very young age also, and I'll be happy to share that I've been also been appointed by a couple of colleges, especially Hansraj College in Delhi. Then you have Vishwas College of Ghaziabad, MIT, and UPES Dehradun, who have hired us and our services to be the mentors. I'm also a DPIT mentor for the purpose of mentoring the young startups. And it was a great privilege for us when we meet these young guys who are great with ideas. But yes, now where do our opportunity lie is something that it will be interesting to understand. Now this is like a huge opportunity scale for all of us. We have a startup. Then there is a Marg mentor. If you are registered with Marg, it is even better for all of us. If you're a Marg registered mentor, then you have the basic mentorship programs that we always do. We have an accelerator. Then we have institutional support. We have the corporates, the government, individual investors, incubators. So this is the whole atmosphere where we all can be a part and parcel of the entire ecosystem. Now it all depends upon our zeal, our ambition, personal ambition of where we want to be. So we can only either we are happy to be just a mentor, or we then help him to not only just developing a business plan, but also then taking ahead how he can get trademarks, why should he get patent, why should he get copyrights for all his products, and not just that, how we can make sure that when who are the startups. I mean, like for most of us, I was surprised when I meet a couple of professionals who are yet not very confident about who really are startups. So I think it will be interesting to understand who really are startups, and does every startup get a fundraiser also or not? I think that's also an interesting question. Very recently, I was watching Shark Tank's one of the episode, and there was a young couple who had designed, who were basically teachers, and so they've already taught some 70,000 students, and yet they could not raise funds. Why was that? Like, despite everything going good for them, yet they were not able to raise funds. It was a little surprising, but yes, when you deal with such kind of people, you learn who can really raise funds, and why such people, some people don't get funding. A startup is not just about any other business. So we'll have to understand and make our clients also understand who is really a startup. The startup can be somebody who can be an existing business. He can be into a manufacturing sector. He can be in service sector. He can be just into, at times, printing of the covers, or probably the designing of products. But who really are our startups, and how our startups can be attractive investment opportunities. So with that particular episode, I could understand that the sharks out there don't just look at interesting people, interesting products, but they need scalable businesses. They need businesses that can be scaled, not just pan-India, that can be scaled across the geographies, and also who can raise and make wealth for them, because that is what is the entire thing about. So I think in the whole ecosystem, we'll have to understand where our clients have the opportunity, how he can create from a normal business, he can be a great startup, and then how he can tomorrow become somebody who can raise funds from the venture debt and then venture capital, seed capital, and probably even SME listing or IPO listing, because that is what the actual investors are actually keen to look at. Till now, in case you have any questions, so probably it will be nice, or probably we can just go ahead with the other part. So basically, as you must be aware of the kind of basic topics that we have listed. So we are trying to cover today a few things, like one is the overview of the opportunities, the startup mentoring, the role of DPIIT, trademarks, copyright, patents, valuation strategies, creating the pitch desk, the income tax benefit. Of course, ATI is somewhere for something that a lot of clients do hire us, and of course, they'll hire you as well. And then, of course, there are a lot of government schemes that you can educate your clients. What are those schemes, and how such schemes can be tomorrow be beneficial for the clients, and of course in the whole funding landscape, because that is one of the most exciting parts. So you have to see what basically geography, what sphere, or what vertical you people are comfortable in, so that accordingly we can, in case we have any questions also, so we can take them parallelly. So basically, when we talk about the basic ecosystem, the startup ecosystem, as I discussed earlier also, what differentiates between a normal business and a startup, something which is basically growing at a decent pace of 10%, does it excite an investor? Something which can just get maybe a collateralized loan or a CGMS loan from a bank, is that really a startup, or does it really excite the investor's point of view, or the startup geography is something else, or it is something which is more beyond than just basic, I would say, a basic routine business. How suddenly a brand like somebody who, if you are from Delhi, is a very popular brand, which is like BTW, which was more popular for, of course, eateries. How that became the talk of the town. How they made the brand of themselves, right from a thela wala to now the chain of restaurants. Or why a restaurant chain is not as popular with the private equity investors than the packed foods. So what differentiates between a packed food industry from a restaurant, something like a Haldiram or something like a Bikaner wala? If we try to understand what who will excite the investors more? Would a Bikaner wala be more exciting for the private equity investors, or the Bikano, the chips that they have, or the packed food that they have? So when we were talking to one of the large PE investors, for them, the restaurant chain of Bikaner wala was not as exciting. It could be exciting for maybe a BSE listing, but from the investor perspective, or from the private equity investor perspective, their packed food, especially in the chain of Bikano, was of far more value, because they knew that the packed food can grow across geographies, it can go across boundaries, it can go across nations. They can grow pan-India, and that is what is the exciting factor that a private equity investor does look from a startup perspective. We've all seen that India has seen a high rise in terms of the startups from maybe a few thousands till a couple of years back. And today we have almost 1.25 lakh registered DPIIT startups. Of course, there'll be pan-India much more, but not many of them have been educated to register themselves in DPIIT. But I think as consultants, as chartered accountants, it's our duty to not only educate our clients and customers, because that also gives us a professional opportunity for growing our own practice. But it's our duty also to ask them to get themselves registered with DPIIT, because there are a host of other benefits that DPIIT offers for the purpose of growth. Similarly, if you're talking about what really can be my role, of course, we are seeing a lot of growth is there, but what exactly is my role in terms of the opportunities? I think the next few slides, or probably some little time, I think we'll try to invest there. So what CS can help, probably apart from educating them for DPIIT, apart from educating them for the purpose of giving them an opportunity or hope of raising them funds in terms of private equity, venture debt, venture capital, seed funding. They're also an opportunity where we can help them prepare the action plan. We can help them plan. Of course, we've been doing it for the banks when we were making the CMA data, but this is far more lucrative and far more exciting when we're talking about the startups, how we can give them a, help them in creating that investor pitch desk, which can actually tomorrow, be of an interest for an investor. And also on the advising them on the funding options, because there are today a lot of funding options that are available, which were not earlier. If I go back, say 10 years back, most of the businesses were not able to raise private funds. They had to depend upon their collateral-based funding only. But suddenly, I'm sure a lot of people of you also must be looking around and seeing that suddenly there has been a great change of the whole approach. Suddenly, people are approaching the Shark Tanks, people are approaching the VCs and the consultants if they can, raise that kind of money, which of course the banks and NBFCs are quite reluctant. And with the RBI guidelines, the banks and NBFCs are still not comfortable to lend the unsecured business loans above a little, basically a decent level. Their level of unsecured funding is still very less, but still, if somebody has a passion or an opportunity or a dream of raising 5 crores, 10 crores, that too unsecured, there are not support from any NBFCs or banks. So I think that is where a CA can be an important role of how there can be an opportunity. So I think when we are talking about the opportunities and how there's an opportunity for me to grow my own professional practice also, I think then that is the time when we can discuss with our clients that what are the risks and how we can help them in taking care of the risk, because we have come across a lot of startup promoters who may have the idea or who may be technically sound in terms of the coding, but they were not very sound in terms of financial planning. They were not sound about the preparing the pitch desk. They were not even knowing about the benefits of income tax, or they were not even having the complete idea of how they can make what kind of business plan would be needed or what kind of expense they can foresee in the coming future. I think there's a huge opportunity for us to reach out to those startups, and that can be possible if we can go down even till the management institutes or the engineering institutes, and of course people who get themselves registered with DPIIT. If we can reach out to them, because there's a huge amount of opportunity which is still a virgin opportunity, which is a virgin land, where I think if we as small practitioners have to increase our professional practice or a business opportunity, I think we can reach out to those people, because these are the people who really have the opportunity of growing big tomorrow. And it'll be nice if we can connect with them at an early stage, mentor them, guide them, help them prepare their business plans, reach out to the investors for them, or maybe even represent them at the lobby, so that we are able to guide them how they should be able to grow their business, grow their capital, grow their wealth, and then also keep their wealth safe, so that there's no harm to them when the values are very high and sensitive, so that their interest is also protected both legally and financially. There are also a lot of opportunities where your clients may be keen to go public at some point of time, especially if you're looking at SME listing. And the SME listing is also a great opportunity of professional practice, because it gives you an opportunity of doing a lot of compliance work for a client, because an IPO, even if it is an SME IPO, it involves a lot of professional help. And I think it's again a great opportunity for CAs. Of course, there is a lot of work from CS also. But if you have a decent team, you can take the entire work on your own shoulders also. And from there, maybe if you can, if you are one of your clients or as one of your startups want to tomorrow go in for any kind of an IPO, especially SME IPO, even in that scenario also, there is a lot of opportunity of professional work, which can be, so in case you can prepare your team accordingly, and you can have multiple people working for you, I think this is a great opportunity for us. And then, of course, comes the tax planning. Of course, in a couple of slides ahead, we'll discuss about the what are the government schemes and opportunities that the government has given. And in that also, I think we have a we have as a duty also and a responsibility, and of course as an opportunity. If we can reach out to the clients, we can educate those clients. Still, many of the clients may not know the benefit of it, and if you can educate them and help them get the ATIAC, or when their investments are coming in terms of Section 56 also, in case we are able to give them the tax planning advisory so that they are not taxed heavily when they take up money, which is of course far more than their fair market value, because the fair market value may not have developed in terms of the books, but because since you're getting a lot of premium on the money, how we can safeguard on the tax planning, I think that's again a very big opportunity. I'm just trying to share one of my example, my own experience when I was a part of a ATIAC, opportunity that we had received. In that also, we could sense that a lot of those clients had earlier tried themselves, but they had failed, and yet with the proper documentation, proper planning, proper representation, we were able to get our clients ATIAC certification. And then, of course, that not only brings us opportunities for business, but also a long-term relations and commitment from our clients. So I think it will again a great opportunity if you can, prepare your teams, prepare your staff, who can plan your the basic presentations accordingly, and then, of course, from there on we can get more clients and educate more of our own staff. And then, yes, this is a great opportunity for raising being a part of some large corporates later in the life. There's one more opportunity that I would want to share, and that is the business valuation. I don't know how many of you would be doing business valuation at this stage, but how many of you would have got an opportunity of doing business valuation. But I think that's again one great opportunity. Of course, we will be doing some broad exercise later in the evening as we progress. But still, if any of you have ever experienced this opportunity where we can be any help to our clients in terms of valuation, how we can advise our clients what should be the decent valuation of raising funds, what will be is it about based upon the turnover because of the industry. There'll be some industry for which the turnover may not matter. For some industries, it will be the EBITDA, or for some industry, it will be just to be an idea. So I think depending upon all those factors, I think we'll have to see that where do we, how do we advise our clients, how we can see that our clients can get the best value out of their business idea. Because if you will look into the lot of large corporates who have raised funds today, what is the kind of equity that they are holding? You'll be surprised that some of the large corporate, some of the large startups who are today large enough, the initial promoters are holding less than 5%, 3%, or even 2% in the whole business model. So because what happens is that initially you don't have enough capital to start that business, and you end up giving a lot of equity for raising the basic capital also. So I think that is again a very important aspect to understand, that how we are not able to, we don't waste our initial capital, how we can raise the maximum out of it. So I think that depending upon all these factors, it'll be interesting to understand how we can, tomorrow be a part of the team which is bargaining with the clients, along with the clients from the investors. And that is one more interesting opportunity. It's of course a challenging opportunity as well, but that is again one opportunity where I feel that we all can have a professional say, and we all can grow our professional practice as well. And I guess again, in terms of the exit strategies, how do you plan for your exit strategies or tax implication? optimizing the financial outcomes. Again, these are the few main important things that we'll have to understand as professionals, as financial consultants, where our expertise lies, so that we are handholding our client, so that at any point of time or any stage, he doesn't feel lost or he doesn't feel intimidated by a VC or a private equity, because a lot of in the PE space, there are a lot of stories which we hear on that count also, where at the end of a cycle, the private equity players want to bring in their people on board, or they want to change the directors or the managing director as well. So I think in all those spheres of business and growth, I think it's all on us also to see how we can tomorrow take care of our clients' requirements, needs, and educate him in terms of how he can raise money and then protect his interest as well. There are a lot of stories that we are now listening. For as a consultant who also started his professional practice some few years back, I can be very I can advise you on this, that for all of us who are having an interest in this kind of line, I think it will be very interesting that we try to see what is happening around us, because that is what it teaches us most. There are people who have suddenly, raised out of nowhere, or who are the people who are actually investing money, who are the angel investors, who are the financial investors, who have the interest of investing what kind of money. Because in the investment of money also, we have all brackets of people. We have people who are happy to invest not more than 50 lakhs. Then there are people who are happy to invest not less than 50 lakh, 5 crores, or maybe even 10 crores, 20 crores, 100 crores, 300 crores. So there's a bracket of investors. So we'll have to see as to what kind of clients that we want to work on, what kind of clients that we have, or what kind of clients we want to pitch for, what kind of investors that we have. So I think depending upon all those factors, it will be interesting that you have to understand and decide as to what kind of customers you're looking for, and accordingly, we'll have to see what kind of people are raising money. So you have all kind of people who are raising funds. You have a fitness startup also, somebody who has raised money. Then you have a robotic company also raising money. So these two people are extreme case studies. From a fitness, from a Zerodha's Rainmatter has invested into the Pune-based fitness startup, to somebody who's a robotic thing. And then I was talking to you about a client who did not, of course, get the money from the Shark Tanks. But now we hear stories from them that they're getting all kind of invitations from all kind of people who are inviting them. And I'm sure from education sector also, of course, we have heard some wrong stories about Byju's. But even now, there were some beautiful stories of people who are raising money in terms of education sector also. So I think it will all depend upon how much zeal we have, how much interest that we have to be able to raise money. And we'll have to make our network strong enough so that we know that what kind of people are there in the market and what kind of interest do they have. So this is a story of two brothers. The company's name is Two Brothers. So basically, they started initially with the organic coconut, and today they've got customers distributed across 34 countries and over 45,000 customers that they are doing in 664 cities. So again, even from a startup perspective, maybe initially a lot of people may have thought that a coconut company may not get any VC or a private equity, but then it was their passion about creating a brand out of a coconut. And I think in that also we have got a lot of other stories. We hear it, either it can be a Bira from a beer brand, it can be Mother's Delight, it can be, so there's a lot of opportunities, be it a milk company, be it a beer company, be it a education company. So I think it will be upon us as consultants to understand, what is our domain, what kind of customers we are catering to, what kind of industries we are catering to, what is our focus area. And I think from there onwards, we'll have to see what kind of investors are there in the market, what does the investor look at, what kind of investors you have good relations with, whom you can bring on table. We've heard a lot about DPIIT as such, exactly as to what is DPIIT. Sorry. We're hearing a lot about DPIIT and what really is the DPIIT, or from DPIIT perspective, what really is the DPIIT, what is it, what government body it is, and how does the DPIIT tomorrow help me in terms of recognition, or get me, how if I'm recognized at DPIIT, what kind of benefits that I have in terms of a startup, in terms of a consultant. So I would want to share my experience that we are also in part of the DPIIT mentorship team. We're in panel with DPIIT, and so there are a lot of opportunities in terms of being a DPIIT mentor, especially when we are able to promote our clients to get their startups recognized and registered. Today there are over maybe 130,000 more registered DPIIT startups that we have in India, and the growth is going phenomenal. DPIIT is responsible for recognizing and certifying startups based on specific criteria. The recognition is aimed at providing the acknowledgement to emerging businesses. So what exactly it is? So we'll have to understand that, DPIIT, or recognition of DPIIT is basically a stamp in that, yes, we are a company who has a zeal to grow. We are a startup which have a, we have a either ideation, and we are still at the ideation stage, or we are at the growth stage, but we have a business idea that can be tomorrow be nurtured into a great startup also. But before that, I think registration with the DPIIT is the first step that I think every business should take, and I think you should educate your clients to first get themselves registered at DPIIT, so that at least by the time their businesses grow, when they would need bank support, when they need NBFC support, when they would need DPIIT support for getting them say 1 crore or 50 lakh loan without any security. For that, it'll be interesting that we have DPIIT registered, because only then we'll be able to get those kind of subsidies or grants, or even that kind of subsidized loans, or even that kind of credit guarantees from the government, which is basically given to the banks, NBFCs, and the AIFs. Basically, DPIIT is nothing but a body that formulates and implements policies that support the growth and development of the ecosystem. These policies are designed to create a conducive environment for startups to thrive. And of course, it's a regulatory body. It takes care of like a lot of, in fact, when we go to their site also, we find them very, very energetic. It is not as usual as what we used to understand the government departments some 10 years back. There's a huge change in the approach of DPIIT in terms of while they're handling our startup applications, or even when we are approaching them for getting online registrations as mentors. So basically, what is the role of DPIIT? The promotion of innovation. This is the key for which DPIIT has been created. Right from the directors, the chairman, and the entire body is very young team that basically is highly motivated, and thanks to our Prime Minister, who is giving a lot of opportunities for the entire ecosystem of startups, whereby we have now an opportunity of not only being participative to a lot of trade fairs. In fact, we are recognized at a lot of platforms, and lately we have seen the Prime Minister himself being part of that promotional program and acknowledging the startups, so that the entire ecosystem is changed. There are a lot of entrepreneurs who come forward, who take initiatives, risk, and of course bring interesting products on table. So DPIIT basically, it supports the development of innovative products and services through various schemes. But before that, I think it'll be interesting to understand that what is the company that a DPIIT does recognize, if my company is basically a startup also or not. So that will be interesting for all of us to understand that if my company is really a startup also or not. your company must meet the following criteria to be considered eligible for DPIIT startup recognition. Now, of course, the broad parameters we all understand, but still for a general overview of all those who would want to see it even later on. The period of existence and operation should not be exceeding 10 years from the date of incorporation. They must be incorporated as a private limited company or a registered partnership firm or an LLP. They should have an annual turnover of not exceeding 100 crores for any of the financial years since its incorporation, because the whole idea is that it is basically to promote the MSME sector also, because a lot of startups, if something which is already 500 crores, probably then it doesn't really need the grants or doesn't really need the soft loans or the credit guarantee schemes of the government, since it is already above the basic threshold. So the idea is to bring these kind of companies, the seed capitals, the acknowledgement, so that tomorrow they can participate at a lot of programs and raise funds. Entity should not have been formed by splitting up or reconstruction of an already existing business. I'm sure as professionals, we all understand this, that our company basically is not to be created out of any restructuring of our company to just make it a new small company. Rather, it should be a business that should be created with the vision and with the idea of creating something which is large and something which can be created tomorrow, which can be created something large. Of course, the basic whole ecosystem is that it is still a very small company. And when we go through the DPIIT website also, we see all kind of people. Some are there who are just at the ideation stage, some who have just invested the basic seed capitals. Then there are few who are looking at the growth and mentorship for the growth. And of course, then there are somebody who are even a couple of years down the line, and they're coming up with some interesting products also. As we go through, I'm just trying to share one of the experiences of what is the difference between a normal company and a startup, especially when you're talking about a startup which is accepted and recognized by even ATIC also. And of course, most importantly, for a startup, most important thing is that it should work towards development or improvement of a product, process, or a service, and should have a scalable business model with high potential of creating wealth and, of course, employment. So creating of wealth, expansion opportunity, and working towards improvement of a product and process. I think that is the most important essence that as professionals, we all understand it. And I'm sure we can educate our clients how his business model should be created. If it is not scalable today, probably it will not attract the investor lobby at all. If it is limited to a one man, one shop, one floor, then again, it doesn't even, no matter how good the business is, how good the profitable the business is, it may not be of interest to investor lobby. So what really is the interest of DPIIT? DPIIT's interest is that my product or services or manufacturing base should be something that can be either be an expansion, improvement of a process, product or service. There should be an element of some kind of an innovation that can be of really excitement, or also creating of the wealth. So this is few things that DPIIT takes when they are looking at registering your company as a startup. Most importantly, I think before I move ahead, I would want to share that there are companies, as I was talking to you earlier also, there are companies which is basically, if I name the company, it's called Raja Rani Couture. So they are also into the education sector. They are educating a lot of women in terms of creating their own couture and or dresses and designs and everything. And yet, when they went to the Shark Tank, they were not able to raise funds. What was one of the major reasons was, of course, this only, that they found that no matter how profitable you are, your EBITDA is almost 33%. You're doing wonderful business. The banks are there to give you basic support. Of course, we don't have collateral. And yet, it was not of an interest to Shark Tank because they believe that you are a single teacher organization. You don't have an organizational chart where tomorrow you can multiply your teachers, you can multiply your product or you multiply your services. You're basically a one teacher faculty. Basically, the tuition center that you are running is basically more of a tuition center and not a tuition organization. So I think that is where it's important as a consultants, if we can advise our clients that we can, guide them, that they don't have to limit themselves into a small geography or a small area or a small scale. Rather, there should be an opportunity where tomorrow they can give enough space for others to grow. Why register yourself at DPIIT? Now, I think from here on, maybe we can basically taking upon some interesting ideas of why we really want to register ourselves in DPIIT. To reduce the regulatory burden on startups, thereby allowing them to focus on their core business and keep compliance costs low. Of course, the whole idea of DPIIT or creating a DPIIT structure was this only, that what they wanted was that if they are able to create an ecosystem where they not only nurture the startups, they bring them the environment that is friendly, which is more business friendly, not only in terms of starting a business, but also in terms of reducing the size and scale or the labor laws or a lot of other opportunities where areas where tomorrow there can be complexity in terms of a normal business. So if we are doing a normal business of manufacturing, there'll be a lot of labor laws that might, take a lot of time of ours. Probably we'll have to hire a proper labor department to take care of the labor laws and the labor issues and problems. But from a startup perspective, they have created and reduced amount of compliance so that for various laws, be it environmental, be it labor laws. So benefits of DPIIT registration, we just have a small look at from the labor laws perspective. The startup shall be allowed to be self-certified compliance for 6 labor laws and 3 environmental laws through a simple online procedure. So again, as chartered accountants, it's an opportunity for us to educate ourselves and then tomorrow go ahead and meet the startup and give them a feedback of all what there are opportunities from the government perspective and reduce their burden and probably become a growth engine partner with them. In case of labor laws, no inspections will be conducted for a period of 5 years. So again, this was a very important aspect because from a manufacturing point of view, I think this is a real one big headache in most of the states, in most of the places around the industrial belt we have seen in practical day lives. But for the startups, they have been ordered that in case of a startup, there will be no inspections will be conducted for a period of 5 years, except of course there is some sort of a complaint that they have received. Of course, that also in writing and approved by a very senior officer. Then only there will be a site inspection. But otherwise, from a normal business point of view, they do not want to unnecessarily bother you for small issues, small operational work that you're doing. Similarly, benefits of DPIIT registration in terms of self-certification. So startups can self-certify compliance with labor laws for a specified period after incorporation. This simplifies the compliance process and reduces the administrative burden, especially in the initial days of operation. So the whole idea of giving the leverage to the startups, both in terms of the labor laws and other laws, was basically this only, that the government wanted a conducive environment, homogeneous environment, so that from a startup, if he is registered with DPIIT, if he is registered with the government body, then in that scenario, they'll be able to give them a conducive environment so that they can focus on the business opportunities, the innovative products, processes, services, and a lot of hurdles of businesses, especially when it comes to labor, that are not reduced. There was also the flexibility in the employment terms. So DPIIT recognized startups have more flexibility in terms of hiring and employing the workers, including innovative employment terms, stock options, etc., without the strict adherence to traditional labor regulations. So from a traditional labor practice, where a lot of things are still controlled by the governments and the labor laws. So there are a lot of relaxations in terms of the startups. So I think overall, from a business perspective, the government has given a lot of free space for the startups. So I think as consultants, it is our responsibility, opportunity, and duty to see how much we can go in the market and educate our clients, and probably that is also opportunity to create long-term relations, long-term friends, long-term bondings with our clients, so that tomorrow we can be growth partners with them, especially when if any of those startups can rise to a very senior level, or maybe even when they can be of the level of raising private equity, or venture debt, venture capital, etc. There have also been reduced compliance burdens, so startups may enjoy reduced compliance requirement, especially in terms of wages, working hours, and other labor-related matters. Then we have an ease of exit. In case of any tough time, simplified norms for employee exit while minimizing disruptions to the business. And of course, there are a lot of government schemes, there are a lot of government initiatives like subsidies, incentives, and training programs for the startups and their employees. So, in terms of subsidies also and grant subsidies, there are the credit benefits that they have. The government has given a lot of leverage to these startups, and again, depending upon how well educated we are about the opportunities and how we keep ourselves abreast with the opportunities that the government is supporting us, I think we can take a lot of benefit from the opportunities that we have, and maybe tomorrow we can help our clients to be far more flexible in terms of growth of capital. Then there are a lot of opportunities also in terms of so as consultants, so our responsibility is not restricted or limited to just financial planning or be the bookkeepers for them. And probably tomorrow we have some interesting opportunities both in terms of patents, trademarks, and copyrights. So we are basically from the perspective of you understand from the trademarks, copyright, intellectual property rights. So these are again one of the areas where the CAs, especially when it comes to trademarks and copyrights, there are a lot of opportunities that there are in the market. And so if we have a team among us only, where they can specialize in helping a client get copyrights and trademarks. So I think that is again one key area for any startup, because what happens is that any startup that comes up with some interesting idea or some interesting opportunity needs to safeguard it and protect its identity, be it in a trademark form or a patent or even a copyright. So it is important that to safeguard its technology. So how you can help him to educate him to take to the objective to reduce the cost and time. The government has been minimizing the patent work also. So they have got their own directors, which are basically kept separately from the patents perspective or from the startup perspective. So in those category also, a lot of government is giving a lot of flexibility and support in terms of the intermediaries. And there are also the government schemes where even the cost of that intermediary that is helping getting a patent, that is reimbursed by the government itself. The startup doesn't have to pay also. So basically the startup has to basically pay only the fee of the government fee, but not the consultant fee. And the consultant fee is also then reimbursed by the government itself. So otherwise, historically, the patent filing has been very time consuming and tedious processes. But now it has been made, a lot of things are made online. And the objective is to reduce the cost and time that a startup to acquire a patent, making it financially viable for them and to protect their innovations and encouraging them to innovate further. Fast tracking of startup patent applications. Now, the patent applications filed by the startup basically this is again one opportunity that we all can make use of, because patent applications filed by the startup shall be fast tracked by the examination so that their value can be realized sooner. And also, a panel of facilitators have been empaneled by the patent design and trademarks body to fast track the process. And these facilitators are basically, you don't have to actually bear the cost of these facilitators also, because the government bears the cost of the facilitators for any number of patents, trademarks, or designs that the startup may file. And the startup shall bear the cost of only the statutory fee payable. And also, startup shall be provided an 80% rebate in filing of patents vis-a-vis the other companies. Now, this is something which may not be, not many startups may be even educated about. So I think this is again our responsibility and area where we can grow, where we can create an opportunity to reach out to our clients and customers and educate them how the opportunities are there in the market, and how we can, tomorrow give them better services and be their long-term partners also. So the startup shall be provided an 80% rebate in filing of patent vis-a-vis other companies, and this will help them spare cost in basically the crucial formative years, because initially the startups are very tight in their financials because they don't have enough resources coming their way. And so I think for that initial phase, it becomes even more necessary and important, where we can help them with the small cost advantage. There have been a lot of stories in terms of startups, and where we have also seen that a lot of our CA friends have actually grown ahead to create their own AIF. And so I'm not sure how many people of you who have been basically into the practice of core direct or indirect taxation have been have shown their interest in terms of patents and in terms of basically AIFs, and how many have you basically now grown yourself as investors also. So I think this is again one great opportunity if any of you have an interest to create their own AIF. Now, what is an AIF? I think that will be again interesting. So AIF is basically a new age funding opportunity where, for either the purpose of debt or for the purpose of equity, it's like a private limited company that comes across and registered itself with SEBI. So it is not made registered with NBFC, with the RBI. It basically is registered with SEBI, that controls and supervises it. And be it a fintech, or be it with investment opportunity, or it can be basically a company that has created a corpus of investments. Basically, it raises the funds and then redeploys it among various startups depending upon the benchmark that they have created. I think that is again one big opportunity where, if you as a CA want to tomorrow enhance your practice, there can be a good opportunity for professional growth in case we have an opportunity of AIF in our interest. Of course, now we have that basically the income tax exemptions that we have. And a lot of you who are professionally qualified, I'm sure, are well aware of the income tax benefits that a startup does have. And so the whole idea is not to go into the in-depth of what are the benefits, but for us as chartered accountants, how we can get this 80IAC exemption is rather more important. So I'm just trying to share an example of how we were able to create a or we were able to get that 80IAC. So I'm just sharing my personal experience. So we were hired by a company which was basically an NBFC. So they were into housing loans, and so their application was rejected twice. So they came to us, and they wanted to understand as to why their application is getting registered, getting cancelled. Basically, if I want to go back to the history as to what that company was doing, I think it will be an important learning for all of us. That company was basically a housing loan finance company. They used to give loans of not more than 15 to 20 lakh rupees. The basic housing loan started from probably 2 lakh rupees. Now you must be wondering, at 2 lakhs, what will be the house that the person will be buying? Or at 3 lakhs, what will be the house that the person will be buying? And then what could have been the criteria? Because probably for a loan of 5 lakhs, 3 lakhs, or 10 lakhs, you may not be even having maybe even a valid PAN number or CIBIL. That was the most interesting thing, that without CIBIL they were disbursing the loans. And what made them different from the others was that basically they were identifying very low level, financially very low category. So their category of customers was somebody who was running maybe a sweet shop, or he was a small vendor of vegetables or fruits, or it can be any other persons who would be who may not have an CIBIL, because he may not have taken a loan earlier, or he may not have got a loan earlier. So basically, they were giving housing loans to them. But how were they identifying that the person has got sufficient capability also or not? So they were basically taking his Paytm statements, and that was how basically they were able to identify from the Paytm statement that what was his basically receipts during the particular month or a year. And that was very interesting, because this was not something that was highlighted to the ATIAC department also, the DPIT department also. So we created our presentation highlighting the fact that we have a software. We had a proprietary software that basically extracts information from the API, the ATM PayU statements, or any other measure, payment gateway. From payment gateway, they were able to identify the creditworthiness of the client, or how much the client was getting in terms of revenue. And that is where they were able to, that was a proprietary software, and that is how they were able to get that ATIAC exemption certificate after the due representation. So I think it was again an opportunity for us to represent our clients in the way the department would want to understand its what kind of differentiating company that you are, or what kind of new product or service that you are giving to the customers. So this is, I think, one interesting example I thought I'll like to share along as we grow. And as we all understand, that ATIAC exemption is basically for all those companies which are basically into which are firstly, of course, which are DPIT registered. And it's very surprising though that even till today, not more than 3,500 companies have been able to get the ATIAC exemption. There are a couple of reasons behind it. One, probably as an opportunity for CAs also, I think we should reach out to those startups, and we can encourage them if we can take their case to the department. But moreover, we'll have to understand and see that how we can prepare our clients to tomorrow get ATIAC exemption. So basically, what exactly the ATIAC exemption is, of course, as we all must be understanding it, that is basically eligible startups exempt from paying income tax for 3 consecutive financial years out of their 10 years since incorporation. And of course, yes, it was started from April 2016. And investment into the eligible startups by listed companies, registered VCs, private equity players with a net worth of more than 100 crores or turnover of more than 250 crores shall be exempt also from 56 to 7B of the income tax. So this is again one more aspect of professional that in terms of our clients, we can educate them that what are the overall tax benefits that the government has given, both in terms of ATIAC and in terms of 56 to 7B. So these are the two main income tax benefits. One is that as a company, I am exempted from my income tax profits for the 3-year period. Of course, the basic criteria remains the same, that one, I should be a DPIT registered company, it should not be from more than 10 years. It should, within the period of first 10 years only, I'll be get for the 3 consecutive years. So if I satisfy all the criteria, then yes, we are able to get the benefit of that. And yes, the second company is about the section 56(2),
whereby, suppose as a promoter, I have, given my equity, say a 10 rupee equity at 100. So what happens to that 90 rupees? If I end up paying tax on that 90 rupees as income from other sources, I'm sure you understand that we end up paying a huge amount of tax. And there'll be a huge amount of tax outflow also. But to safeguard that interest, the DPIIT registered companies were given this benefit of Section 56(2), where if a company receives in any financial year, previous year, any consideration for the issue of shares that exceeds the face value of such shares from any person who is resident, the aggregate consideration received for shares that exceeds the fair market value shall be exempt. So this is again a very important and interesting section where I think we must educate our clients, customers, and the startup domain, so that they have a belief of you being a great tax planner for them, so that tomorrow, if in case they are able to raise funds, so you are able to guide them in terms of both the income tax benefits of ATAC and Section 56. In case we have any queries, I think we can surely take them up in case we have any.
So we have shared your query on your mobile, WhatsApp and email ID.
Mhm. So in case there are any queries, we can probably take them. Go ahead, or do you have any queries? So basically, what further I think we'll have to, if we look at the insolvency procedures also, what are there for the startups, I think we'll again have to understand that what are the DPIIT based insolvency procedures that the company has laid down, which if we can educate our clients, I think it again a great professional opportunity for all of us. There are simplified insolvency procedures that have been laid down. As per the Insolvency and Bankruptcy Code 2016, startups can be wound up within 90 days of filing an application for insolvency. Of course, you will understand it is a very tedious process. Normally, in the normal business, it is not, it's easy said than done. It doesn't really happen that way. But still, for startups, they have chartered a program whereby they would want that in 90 days, the entire proceeds are, of course, the entire procedure will be given to an insolvency professional who shall be appointed for the startups, and he will be responsible for the sale, liquidation of the assets, and of course, paying the creditors within 6 months of such appointment. And this process will respect the concept of limited liability. Limited liability means that the promoters will, of course, not be penalized for any kind of the amount that is left without same. But still, in case there is any amount that is due from the creditors, and that will be able to be taken care of.
So we have shared your query received from participant on your WhatsApp.
On my WhatsApp?
Yes, sir. Yes, sir. And your email ID also we have shared.
One second. One second. There are a lot of opportunities in digital transformations and use of new technologies in business. How can we gain more insights in this field, and what are the relevant learnings available online, offline platforms which can help us be good at this skills? Can you please elaborate on the valuation of the startup? Of course, that is again coming up. What we mean for easy norms for employee exits, and can we go through the discuss any practical case studies for any services provided by you? Yeah. So I think let's go by the question number 4 only, because that is what we are doing day now. Of course, lately. As for the services that we are practically giving at this particular stage. So if we are, if I just elaborate on the kind of services that we are giving in terms of the services to the startups. So I'll start with the ATIAC that we were given, the opportunity that I had just shared earlier also. And in that ATIAC thing that we did, in that also it was the, I think the major breakthrough was of properly preparing a case study for the presentation to the DPIIT and to get that ATIAC benefit, where in the normal course the company was not able to get. It was rejected twice, and that was one area. And after that, I think we've been approached by a couple of companies, who wanted to, get that ATIAC, and that is again one big opportunity for us. Secondly, what happens is in terms of we've been active in the areas of helping them raise funds. Now, how do we help them in raise funds? In that also, what happens is that is quite easy said than done. But then what your hard work is that you have to basically create your relations with all kind of investor lobby, which is basically giving to understand what kind of people invest at what kind of companies, what kind of the companies do get the kind of funds, and most importantly, you'll have to understand that is it a seed capital that the company is looking, it is the venture capital that is company is looking, it is a venture debt that the company is looking. I don't know how many of you are aware of venture. What's the difference between a venture capital and a venture debt? Now, a venture debt is basically which is given to a company, to a startup who was able to raise a venture capital, but then nothing beyond that. So, a venture debt is basically when a company receives debt, they don't have any collateral to offer to a company. They basically receive venture debt. In that, I want to share an example of Hero Electric. Now, Hero Electric is basically not a part of the Hero Honda group, of course. Basically, a part of Munjal company. Hero Cycles was their earlier company. They started Hero Electric on the basis of a private equity only. So they were able to raise 350 crores. After that, they were not able to raise further equity, and we were able to help them to meet for the venture debt, because venture debt up to 100 crores or maybe 200 crores is basically a good deal that you're working professionally. Because what happens in that scenario is there are no collaterals that the company is offering. That is something very surprising, and it will surprise you also that if you are able to raise for your clients 200 crores without collateral, in normal banking parlance, you can't do it. Similarly, there are a lot of companies which have come up now, which are AIF model companies. In fact, lately we have been able to get a expression of interest from a company whose turnover is just 5 crores, and we are able to get them 2 crores of funding from again a AIF. That's also a venture debt. It's not a venture capital. Basically, a revenue funding, because there are a lot of new age companies that have come up in the market, which are basically doing the venture, what you call as the funding on the basis of the business opportunities and business growth. So this is one area again that you can do. You can practice as a consultant to help them reach out to the fund houses. So before that, you'll have to create a kind of relations with there'll be other companies who would want to only invest in companies like Blackstone or there'll be something like Chris Capital. These are the companies who do not invest anything less than 300 crores. Then there'll be a company like a Bain Capital. They do not invest anything less than 500 crores. There'll be something like there's a company called Club, KLUP. They are the companies who are happy to do only small loans of 2 crores, which is unsecured to the startups. So I think you'll have to, go ahead to see what kind of what domain are you trying to touch? What are the kind of customers that you have? What kind of clientele that you have created? And what kind of network that you have in terms of the fund houses whom you're having good relations, so that you can reach out to those clients and customers. If you have another question, probably we can take that also. And of course, before we go into the evaluation of the business.
Right now, we have no more questions, sir.
Just a minute, sir. I'm just. Yeah.
You can go ahead with the session, sir. Right now, we have no more questions.
No, I'm just trying to take care of the screen and the screen share. Yeah, so there is one more question that we have. There are a lot of opportunity in digital transformation and use of new technologies in business. How can we gain more insights in this field, and what are the relevant learnings for online and offline platforms which a CA can upgrade his skills? Now, there are a lot of digital transformation. Digital transformation in terms of they can be something like. How many of you have seen even the growth of the webinars that have happened, or how the webinars were in itself were they were able to give that kind of 1 second. Screen sharing. So there are a lot of if you can see that there's a very simple concept of webinars. Webinars were able to tomorrow help you reach out to a million customers or million friends. Similarly, there are a lot of opportunities, or there are a lot of learnings that we all need to do in terms of the UI UX, or in terms of digital marketing, or there are a lot of opportunities in terms of how we can raise out to our slide. So in terms of, we have to learn all these skills. Even I believe that as a CA also, it is important that we need to understand all these skills, be it in the shape of digital marketing, or in terms of the, So basically we'll have to understand that, how we are able to learn all such, So we have done till here. Very quickly, just going through there's also a lot of funding that is available if in case you have clients who are looking for. So one of our clients basically they were not able to raise funds for a lot of reasons. Of course, the fund houses were not convinced, but they were able to raise funds through this scheme, which is called as the Startup India Seed Fund Scheme. Now, what is that scheme? If we are able to, get our clients funding at this, from this opportunity also, Now, what is this? One second, I'll share with you. This is one more thing that before we can move ahead, there's one more thing that if in case you have any startup clients that you have, this is one more thing that the government has initiated for the DPIT registered companies, which is basically that easier public procurement norms. Now, what is the easier public procurement norm? Is that we all understand that today the government basically has given their portal of GEM, be it in defense or any ministry or any MCD or any other for the department. If you have to give your product or services, basically they put their requirements in there at the public. It's a public platform where you can offer your services, and if you are selected on a very transparent manner, in that also the best thing is that opportunity to list your products and services at GEM. Most importantly, if you are a DPIIT registered startup, there's an exemption from prior experience and turnover. Normally, all these companies are otherwise required to fulfill a basic turnover criteria or an experience criteria. But if you are basically a manufacturing company, or if you are a company which is registered with DPIIT and you do not have that prior experience or turnover, but surely you have that skill or you have that expertise, then in that case, in order to promote the startups, the government shall exempt the startups in the manufacturing sector from the special prior experience or turnover. But of course, their only requirement is that the manufacturing base must be in India. And similarly, for the EMD also, DPIIT recognized that the startups should be exempted with the EMD or a bid security, so that they can participate in all kind of tenders, and they are not, they don't lose an opportunity of participation just because they do not have the exit, they were not able to put in that kind of money. So this is something which is important and interesting. What is the seed fund scheme that the government has brought in for the startups? Not many of the startups are aware of this scheme, and very few of the people have taken the benefit. Of course, one of our clients has just taken, so they got a 50 lakh loan in that in this. It's basically like a grant only. So basically, this is a seed fund scheme which has been started and just became operational in 2021. And so basically, in this, what happens is there's an expert committee of both the private as well as the government employees, and you have got the senior directors of the fund houses also being a part of the team. And their duty is, or their responsibility is, to identify all the applications that they come. And once the committee has cleared it, of course, there's a lot of due diligence required behind it. But once the committee has cleared, so they give you a kind of soft loan grant and also, an opportunity. So a startup fund aims to provide financial assistance to startups for proof of concept, prototype development, product trials, market entry, and commercialization. Basically, the seed fund scheme has been brought in basically for those who are not yet equipped enough or large enough to go to the market, who may not yet get the attention of the VCs or the private equity players, and yet to make them viable, this seed fund scheme was initiated by the government with an approximate corpus of over 1,000 crores, whereby the idea was that soft loans or grants 50 lakhs, 1 crore would be given to these companies. This would enable these startups to graduate to an entry level, so that from there onwards, maybe the angel investors can show their interest. But before that, to make them ready to go to market, this was done. And the requirement is that the startup should be recognized by DPIIT and should not be incorporated more than 10 years. The startup must have a business idea to develop a product or a service with a market fit, viable commercialization, and scope of scaling. The startup should be using technology in its core product or service or business model or distribution model or methodology to solve the problem be targeted. So I think in all these cases, what important is, like for those who are online and being part of this seminar. So I think the idea is that if you really are keen in this particular domain, which is of course little different from the typical direct and indirect taxation domains that we are in, and there's a lot of course responsibility there. But this is a kind of a place where you not only meet new age guys who have the technologies and the mindsets and the zeal of taking the risk and creating something which is out of the box. And be it the drone company, for which of course we are looking now. One of our companies is basically creating drones for the defense sector. So we're creating we have a mandate to take them to a lot of private equity players. And of course, we have taken them to a lot of private equity players. How to start at an initial stage of practice into startup? One has incorporated LLP. Will there be a problem getting venture fund? LLP has DPIT registration in LLP name. So we have got a very interesting question: how to start an initial stage of practice into a startup? And one has incorporated an LLP. Will there be a problem getting venture fund? So again, if you're talking about as a CA, and if you want to go into the practice of startups, couple of things that I would I will advise you. One is that you should now you have to create an interest of who are the people who invest money and at what level they want to invest money. Make a whole directory of all the people around you, be it VC Circle, be it Economic Times, be it all the Google, where you can identify who is investing at which company. Of course, Shark Tank looks more glamorous, but then there is a lot of science and hard work before they reach out to the Shark Tank platform also. So basically, our job is to first be into that kind of domain, and then if you are registered as an LLP, the problem of getting to the venture fund is not about raising money. The idea is that your business model should be good enough to be able to take out to the investors, and only then they can show an interest in your business model as to how interesting that business model is. I think it will be more interesting to see how you are able to nurture your business and what kind of services that you're offering that are interested in that brings interest of the fund houses in terms of your product or service. So it doesn't really matter if you're LLP, if you have an LLP name in the DPIT, that is perfectly all right. What happens is, if you are able to raise funds, then of course you can always convert that LLP into a private company. We all as CAs, do it in our day-to-day profession also. So what type of businesses are eligible for getting the startup registration? Can a real estate developer register for this? A real estate developer is usually not very excited community for them, because very recently, of course, you can Google it. There's a company called Anorock. Of course, they are too large to be a startup, but again, they were self-funded, and they have just recently got a total, I think it's around 200 crores of first stage of Series A as private equity. So they are basically they're not a real estate consultants. So they are basically real estate consultants and not developers. And so what happens is, I think how does this ecosystem really work is that the idea is not that you have to be, well, first of all, real estate developer does not really ban you from raising, private equity funds. Of course, in terms of the startup registration, in terms of the funding or a registration at DPIIT, because real estate developer itself is basically a large ticket product. And so basically it goes above the DPIIT format. But if you're talking about the small scale or the medium scale or even the large scale, there's a company called, I think it's called Swami, SWAMI. It's basically into hotel industry. In that case also, what they did was they basically ex hoteliers and fund house managers, and they were able to raise funds. And today they are running, I think, around 10 to 15 luxury large 5-star hotels, which they created out of private equity. So it's nothing like that. You can't be you can't raise funds, or you can't be a real estate developer, can or cannot be. Similarly, for example, there are a lot of real estate commercial offices today, which are basically running on private equity. There's a company called Blackstone, which is basically having huge amount of investments in the real estate sector, where they have invested in the pre-leased properties. And that's again working on the private equity space. So it's nothing like that that real estate cannot get a startup domain. The only thing is that they're already into a large ticket funding size. But yes, there are a lot of private equity amount that is coming in the real estate sector also. And we all understand that housing.com was basically more of it's not really a real estate consultant also, but it's a platform. So a lot of real estate platforms have raised a lot of big money, be it MyHQ or housing.com, the 99 acres. They're all growth stories of private equity, and that is how they had developed their business model. If you have any other question that is coming up, I think it's be nice. We can take them all along also. For DPIT, I think we have already discussed enough in detail that DPIT is offering a lot of services. Most of the services are online. We don't have to really visit their offices now. And as a consultant, basically your job is to do it on an online basis. And we were talking about the seed fund scheme, preference for creating innovative solutions. Now, this is like you were asking about which sectors are more, more acceptable or more, keen in their investment. So, preference for creating innovative solutions in sectors such as social development, waste management, water management, financial inclusion, education, agriculture, food processing, biotechnology, healthcare, energy, mobility, defense, space, railways, oil and gas and textiles. So these are the sectors which are more interesting in more areas of their interest, where the DPIT is more keen to attract more investors and community. Of course, for the seed fund that they want is that the shareholding by the Indian promoters should not be less than 51%, and the startup applicant can avail the seed support in the form of grant, debt, or a convertible debenture. This is again very interesting that if you can educate your clients that there is a credit guarantee scheme for startups. Like even in the banks, there is a scheme called CGTMS, which basically gives support to the banker to fund up to 2 crores for any CC limit or a term loan. It's usually for the working capital, basically for the clients. So basically up to 2 crores, the government has given a CGTMS scheme for the trade for the manufacturing sector in India, or even now for the traders and work contractors. But the similar scheme has now been brought up for the startup, which is called the Credit Guarantee Scheme for Startups. So the Credit Guarantee Scheme for Startups is aimed at providing credit guarantee. Of course, this is not just restricted to the banks. They have brought in their umbrella for banks, NBFCs, AIA, for of course all the DPIT registered startups that have reached the stage of stable revenue and have not defaulted earlier. So basically, their idea is that if your company is doing decently well, it's in the operation for 2-3 years, it's basically reached a stage with regular revenue where it can take care of the basic interest or the interest payments. So from that perspective, they have the government has created this fund, and this will be available against venture debt, working capital, subordinated debt, mezzanine debt, debentures, optional convertible debt, and other fund-based or non-fund-based loans and liabilities from banks, NBFCs, and AIFs. Any idea if anyone has what is the mezzanine funding? If any of you participating in this conference, what is really a mezzanine funding, and how can your you can bring to your startup clients what is a mezzanine fund? So basically, mezzanine fund is something where we reach out to our investors, even if they're private equity investors, with a kind of a arrangement or a structured finance where he may not be too confident about your business model. So he would want to come in a stage where his money is assured by a certain rate of return of an ROI, and then beyond that, he would be happy to convert it into shares if your business is really doing well. But otherwise, in case your business is not doing as well, in that scenario, there's a concept of structured financing, which is also called as mezzanine funding, but where they are looking at minimum, say, 12% return or 10% return or 14% return. And if there's a profit of more than that, then the investor is happy to get converted into shares or anything else. So, of course, we were talking about the valuation opportunities as consultants. And of course, the CA Institute has also brought in courses that basically specialize you and also give you an authority to take up the projects of being valuers or professional valuers for the shares. But then, of course, there is a lot of opportunities in terms of valuation. So we'll just have a very broad glimpse of what kind of valuation opportunities are there in the market, and how you can take up these small projects in terms of the valuation. But most importantly, if you're working in the domain of startups, so it is important to understand what really is, this valuation, or why does the valuation is required really? Because what happens is that, of course, like even in if we're looking at the BSE, we're looking at IPOs. 10 rupee share is being listed at 280 or 300, 500 or 1000 rupee also. So how do they value this? How do they practically value it? Or similarly, for that matter, tomorrow, if you're taking your clients is basically approached by some private equity investor, and so you are required to create the broad value, or how would you, what approach would you use in terms of identifying the right valuation for your client? If he's being too bullish about his company, or would it be a practical value that he should be able to at least raise a minimum amount? So as consultant, how would you advise? I think that's again a very interesting opportunity. How we will, the significance of valuation of fundraising for mergers, acquisitions, and intellectual property. So basically, the kind of assets, of course, as we all understand, that assets is a resource that is owned or controlled by an individual or an entity such as a company, a business for future economic benefit. But beyond that, we will be required to understand what will be the valuation of tangible and intangible. What will be the value? How would you value the business as a whole? How would you value the intellectual property that he has? He owns the softwares. He owns. Suppose, for example, we were involved in the valuation of a company that was basically into education line, or something which is basically into the valuation of a restaurant chain. From a restaurant chain, what is the kind of what multiple would be used? Be it will it be from the perspective of a revenue, or it will be perspective of the profits, or it will be the opportunity that lies ahead. So I think there are a lot of permutation combination when we are doing kind of valuation, especially in terms, especially for the startups. But most importantly, we have to understand that what kind of multiples that we would be keen to use, especially if you're talking about startup investments. Any questions till now? Is it must to increase the authorized paid capital of the company to receive funding, and how to disclose extra amount received against shares? Yes, of course, it's a share premium, and like any other business model, while we are doing the while we are doing the normal balance also, if there is any kind of funding that is received, there are a lot of IPOs that have come up for the startups or such companies. If you have studied those business models, it is now in fact clearly mentioning also that this, if you're talking about projects, IPOs like Nykaa, Paytm, or many of them who have recently come, especially who had earlier raised private equity. So there'll be an interesting thing that you would, see it. That what happens is that in case there is IPO, and suppose a company has raised say 500 crores, does that entire 500 crore come into the company, or it is basically selling of the existing shares by the private equity guys? I think it will be a good homework for you. You can go back to the Economic Times, those sheets also. Even they are mentioning that 50% of, or 40% or 30% or even more is basically used in the primary sale of those shares that were invested by the private equity players. So they are offloading their investments and making profits. Suppose something like Mama Earth, they had invested something like, for example, some person may have invested 25 lakhs, and through an IPO they were able to get something like 2 crores or 5 crores. So basically, most of the promoter had kept their shares with themselves, but most of the investors had sold their amount. So the 50% of the amount goes to the investors, while the 50% comes to the company. So in this normal business also, what we do is that since we are raising funds, of course, we increase our authorized and paid up capital of the company. And of course, that extra amount goes as share premium. So we were earlier discussing this particular section of 56. So this is basically a section that says that in case we are receiving consideration of shares received by eligible startups up to 25 crores, what happens is that in case the company gets this kind of money, so you don't have to pay taxation on this also. So basically, the whole idea is that the share premium does come, but for the startups, they have given this benefit of Section 56, whereby they don't charge taxation on this premium. Otherwise, it ends up being an extra profit for the company from a taxation perspective. But in the private equity section, they are exempting that kind of amount that has been received over and above the fair value. Of course, IP assets are legally protected and can be legally enforced. They can be individually identified, transferable in economic life. So these are basically the few of the if you're doing the valuation, there are the few of the products. Of course, they have their own value. But while we are doing, be the trade secrets, it can be the industrial designs, copyright, trademarks, patents. So these are the few things that we take care while we are doing valuation. How many patents do we have? How many trademarks that we have? What is the value of the copyright that we have today? And similarly, like from valuation perspective also, of course, then we have got a lot of intellectual property valuations. This is the life of an asset, income stream, separately identifiable. What has been the income stream of that product? It should be subject to destruction or termination, or it should be something that can be sold independently. So there are a lot of lot of permutation and combination that goes behind a valuation of business as a whole, and of course the IPs, because that is where the expertise also comes in. Similarly, the context of circumstances in which it is being valued. Valuation today may be different than what it is tomorrow due to many reasons like market crashing or product losing its credibility. Similarly, status of the business, as the business grows, the value of the technology only grows. So depending again what kind of technology that you are in, does that technology, what kind of future that technology has. So something like if it's the chip market, today the valuation, we still feel there's a huge market potential of the growth. Then what is the time and date of valuation? Then what is the, so these all combination goes while we are doing the valuation. For something like, while doing a valuation of a product, there is something like a black and white TV had come once upon a time, then the color TV had come, and then the LEDs have come, now the smart TVs have come, and suddenly this is where we feel the value of the the products and the valuation of the companies are suddenly shaken up. For example, with the AI now coming in, the chat GPTs coming in, there are a lot of companies who are now taking off their employees. So all these factors work when we are talking about valuing a product or a service or a corporate. Of course, we have by the technical sides that we have seen, of course, we have a qualitative method and the quantitative method. So I think there are a lot of permutation combinations while we are doing the the valuation in qualitative methods. There, the approximate value of the IP asset is also calculated, considering any factor that may affect the asset valuation. So the advantages of quality methods, of course, is that the valuation is performed over easily accessible data and does not complex complex figures. While the limitations of a qualitative method is that the accuracy of the final results depend on the indicators chosen and the quality of the information that we get. Now, so depending upon all these factors, I think the valuation of the product, the corporate, and the opportunity is all dependent upon. And of course, we've all read this in our usual exam books also. We have cost method, market method, and income method. So I think for today, I think we'll keep a session till here, because then again the whole the valuation again is a big process of how we can help our clients, customers, startups to value them in terms of all these methods of cost, market, and income, and depending upon the kind of go-to market that they are going, kind of product again that they have, depending upon all those factors, we would need to see that how we can value these products and services. Any other questions that we have for today? So I think for the next 5-7 minutes, I think we can take up any practical questions that we have before we can call for the day. Yeah, so basically, I think the whole object of this particular program is that there are a lot of opportunities that they are there in the market. There are a lot of clients who need hand-holding services. And then there's a big Mahakumbh that is happening on startups on 16th, 17th, and 18th. I think it's, in case you people are interested, I think you should register yourself. And so probably you'll have to go out there and meet a lot of startups, and we are expecting some over 1,000 startups who would be visiting the campus for the next 3 days. So I think it will be a good learning for all of us if we can go and meet those startups there and try and see that what kind of domain that they're working, what kind of services that we can offer them, and from there onwards, I think we can see as to what all opportunities that they bring for us. And so in case we have any other question, so probably I think we can take up before we can call it for the day. Of course, there's a lot of, in terms of learning, of course, there are a lot of methods, and be it historic method or a replacement cost method or the, The market method. So I think valuation is again in itself is a big chapter from here. And in terms of valuation, yes, there are a lot of complexities that do happen in terms of valuation is concerned. And so historic cost method, of course, how much we have investment, replacement cost, what will be the cost of replacement. But most importantly, I think we'll have to see that market method. And most importantly, as we all are aware as financial students, today the startups usually don't work on the historical methods. The startups don't even work upon the, what numbers that we are making it today. The startups, 99% on a practical level, they work upon what is the opportunity that lies ahead. So if you are into the domain of valuation for startups, just remember, the more glossy picture that you can create for your investors. It is just like if I am teaching 500 students today, and tomorrow if I can reach to 600 or a 700, trust me, it is of no interest to a private equity investor. If they believe that in this year I can teach 500 and the next year I can take to 5,000, and after next year probably it will be 10,000 students in next 3 years, only then I get the valuation what I really deserve or want to, or what I would need to scale my business. We have all heard of the projects called Zerodha, the kind of growth that they have seen. This is kind of exceptional and abnormal, but I think it all depends upon how how a growth prospect is, business opportunity is, and what a startup can really transform tomorrow. I think with this, we can end our session of today here. And I think it was wonderful to get some practical questions from you people. In case there's any practical questions that still you guys have, you can always reach out to us.
Thank you, sir, for taking out your valuable time for today's webinar. Actually, we all have witnessed regarding the development of a startup ecosystem in India. Now it is third largest startup ecosystem in the world. And you very well deliberated on this today's topic, that how chartered accountant can be benefited while practicing into this field. So this is a very good opportunity, and thank you for taking out your time. And thank you participant for watching this session. In case if you have any query, you can write to us on our email ID. We'll send it to Chawla sir. And thank you, sir. We will look forward to see you for another session on a startup.
Thank you. Thanks.